Hello and welcome to Moving Iron Podcast Markets with Shawn Hackett. This edition of Moving Iron Podcast is brought to you by Axon Tire, helping dealers move more iron for the past 100 years. For more information, go to axontire.com. Axon Tire would like to give all the loyal listeners of the Moving Iron Podcast a free pair of deerskin gloves. So send an email to marketing@axontire.com and you will get those sent to you. Make sure you tell them the Moving Iron Podcast sent you. Again, marketing@axontire.com. Send them in. And Shawn needs a pair of those because he's rocking his fall attire today. Look at that. Got the flannel shirt on. He's got the hat.
I was thinking about the earmuffs, but I said that's not yet. I'll wait until a little later into this very cold South Florida winter we're having.
It's a frigid 70 degrees down there, so it's cold.
Just never seen it like this before.
Old man winter's a knocking. That's what I always say. So
that raw tropical air just tough to handle. Just tough.
Oh, man. Valley Transportation has been hauling ag and construction equipment across the country for the past 33 years. Call Parker at 800-657-4910 for all your trucking needs at Valley Transportation. Our goal is to help you reach yours. No matter how you buy your ag equipment, whether it's from a dealer, an auction, or a private party, AgDirect can help you finance it. You can even apply online at agdirect.com. Learn more about your financing options at agdirect.com. Tractor Zoom has access to over $20 billion in heavy equipment sales equipment data. Not equipment, just data. Tractor Zoom's Iron Comps is industry's trusted solution for transparent equipment values and auctionable pricing insights. This podcast is also brought to you by Anvil AppWorks. Their Dealer Connect CRMI app with integrated inventory management is an affordable Salesforce-based solution for your dealership. Create connected customer experience and transform how you work today. All right, Shawn is with Hackett Financial out of Boca Raton, Florida, and he's nice enough to come on and talk about what's happening in the marketplace. So, Shawn, how you doing this morning?
I'm doing really good, really good. Enjoying my morning here, and always looking forward to talking with you about agriculture and prices.
So, and I'm pretty fired up myself to talk to you about what's going on in the world. And so we had a report come out. CPI came out. I read the article this morning. We're up 8.2% for the year through September, which is higher than what they anticipated. So now everything is just getting gutted and just slashed like crazy right now. This keeps the foot firmly placed on the interest rate increase pedal on out there right now. So, Shawn, I guess as you're looking at that, what effects do you see this having on the overall commodity marketplace right now?
Well, we know there's a delay in monetary policy versus impact. So the problem is that the Federal Reserve is using the current data to continue their current policy instead of waiting for the actions they've already taken to start to deliver, which means they're going to overdo it like they do every single time. They always overshoot. They over ease, over tighten. And so now they're going to keep over tightening. And then they're going to find out 2 to 3 months from now when we have like a crash in the numbers, a crash in the economy, and everything comes to a standstill. Oh, we've gone too far. And then they're going to have to quickly, reverse course, which is what they historically have always done. And we'll just have to see how far they're going to overshoot this thing. But this is unfortunately because they're determined to let current data dictate their interest rate policy on a month-to-month basis. This is going to continue to make them over tighten. And there's going to so the markets now have to get themselves priced accordingly for a major slowdown, major recessions, major loss of demand, and that means asset prices falling until such time that the market feels that the situation is so bad that they are going to pivot, they are going to change their mind, and once they give a hint that they might start printing money again, then the bottom is in, and then we start turning the corner back up. And so we can argue when that may be, but given this number here, I wouldn't think that we're going to be looking at a pivot until the first quarter sometime. And it's just a question of which one of these CPI numbers finally gives up the ghost and falls significantly. One of them will, but it may not be enough to stop them from what they're doing until the first quarter. So that means it's going to be a tough period for asset markets. We have an election coming up here. We have an election coming up in Brazil, all over the place. Always a very uncertain time for that. So I don't know. Just seems to me, we have Russia continuing and Ukraine continuing to have this back and forth situation that's very volatile. So just a very, very, very messy time, Casey. Very messy time.
Yep.
So.
And you read the articles about Russia and what they're doing and how they're, they've been threatening for a long time that, hey, you guys, if you guys keep bringing it like to the Ukrainians with aid and those kind of things like you've been doing, we're going to escalate this stuff even more. And we're seeing all kinds of articles about, NATO air defenses and European country defenses and those kind of things, that there's just a huge amount of uneasiness, I guess the best way to put it, in that particular part of the world, that one mistake can really have a big domino effect on what we see happening. It's going to be a big deal. All right, so let's talk a little bit about what came out yesterday, on Wednesday, with the October report that came out. Looked like the markets were kind of favorable to what we see happen, but obviously with what came out, the CPI stuff, they quickly reversed. Shawn, taking a look at that report, any big things jump out to you that said, hey, you know what, this is different than what we thought was going to happen?
If you take a look at the quarterly grain stocks report that came out at the end of the month of September, they were bullish corn, bearish soybeans. And then you look at this report, which was bullish soybeans, bearish corn. On the margin, both reports were within what I would call statistical error, meaning that the up or down was within a natural statistical error curve, which means they didn't really say anything.
Right.
What they said was crops are good but not great. What they said was, assuming demand that we currently believe is there today holds, we're going to keep our supplies tight. I believe that demand is being overestimated, but that takes time to whittle down. So the reality is nothing much has changed, Casey. We've traded. The crop's not good enough. We've traded. We're not going to add a lot of ending stocks. And now the market is waiting around to see how South America weather plays out. Right now, Brazil looks fantastic. It's the best start to the soybean crop in Mato Grosso in at least 10 years, maybe even 15. It's a horrific start to the Argentina crop season, but it's too early to say, you're going to worry too much about that. We need to get in to December and then start taking a look at how we want to discount good weather in Brazil, bad weather in Argentina. You probably get a weather scare out of Argentina or South Brazil if it stays this dry. But for now, right now, I think the outside markets are going to win, and we're going to put some pressure on these markets. So,
right on. All right. So looking at, I guess, when you look at this stuff here, so you got Argentina with their wheat issue that they're having, and the dry, ongoing drought that we see there. We see the dryness up here. Then you've got the Black Sea area. Wheat is still kind of, the little engine that could, if you look at what's going on in the markets right now, winter wheat futures are 2 to 4 cents higher, and spring wheats are 4 to 6 higher compared to what's going on around them. They are kind of that, I don't know, that tether out there that's kind of the lifeline to a lot of these commodity markets. Then you start seeing Turkey was still trying to make sure Russia gets their exports out and fertilizer and those kind of things, which I don't know how much effect that's going to have on the overall marketplace. And then you throw on the rice side, India is looking at sending out some broken rice exports that they said they weren't going to send out anymore. So that opens that up a little bit. But I guess as you look at those true food stocks and those things, what are your thoughts there? I mean, is that just hanging by a thread still, Shawn, you think?
So long as the U.S. weather for Casey winter wheat is so dry, it's even very dry for soft red winter wheat right now. And so long as we have this on again, off again, on again, off again, what's going to happen sort of thing with such a critical item, I just think the need to foods, which is wheat and rice, are going to continue to remain at a premium to most other markets, meaning even I always go back to what occurred in the pandemic, that the only two ag markets that were able to actually rise in price during that chaotic second quarter of 2020 was wheat and rice. So whatever happens, those are you have to have those. You got to have those. Whatever money's available, they will go to those. And so I still think those markets are markets that will hold up. And if we ever get anything that eases back on this very bearish monetary policy, then those markets could really have some significant upside. But I think for now, this environment will keep them from doing that. But I also don't think you have huge downside either from where we currently are. I think it's more of a chopping sideways, slight downside kind of thing. It's just too important. People can't mess around, and government keeps changing their policies with India. And bottom line is, I just don't think everybody, nobody trusts anybody to give them what they want, and everyone wants to stockpile wheat and rice, and that's mantra really not going to go away that I can see.
Right.
So
okay. All right, let's jump down and talk about the proteins here a little bit. I read an article this morning that cattle slaughter still remains all-time highs. You're looking at week over week, they're up 1,000 ahead from last week, and it's 28,000 from this time last year. So I mean, that's a big jump. Still doing the liquidation of herds and those kind of things based around drought and those kind of things. So I guess looking at the cattle market, continues to come under supply pressure, and demand price still staying high. And then you start looking at where interest rates are and what the cost at the grocery store is for beef. I guess looking at this, Shawn, do you ever think there's a leveling out point where even though supply is where it's at and we have some demand issues based around just the sheer buying power of the buying public, I guess, do you see that ever kind of settling down just because of where it's at?
It will settle down. I just don't see it selling down in the fourth quarter because we have plenty of beef supply and demand's falling rapidly. So we've been negative the cattle market now for over a month and a half. Prices have been working their way down. Feed prices are high. The drought is ongoing, at least in the central southern plains. I just don't see, yes, you can have your snapback, technical rallies and that sort of thing, but I think we need to get ourselves, into the first half of 23 before we reach that level you're discussing, that level where we've, gotten all that out of the way. We've gotten that overhang out of the way. And now then we reach the point where, if we liquidate too much more, we're not going to have a cattle industry anymore. And, I think we're close to that, but it's not the fourth quarter. We just got too much supply. We got to eat through it. And whatever we want to say or not say, demand's going to be soft, especially after today's numbers. So, hogs not as cyclically sensitive. I mean, pork is a cheaper meat. It is a little more economical, but it still needs to get Chinese demand back in order to offset some oversupply that we have in the domestic market. I think that's going to come and help them out a little bit once Xi comes out of this CCP meeting that they have in October, and he's indoctrinated as a for lifer. I do think when we look at what's going on in China with pork prices taking off and the China hog price taking off, that I think there's a reason that they, that one based on economics, they're just going to buy the pork because that's such a staple item for Chinese food buying, especially ahead of the holidays they have in January and February. So I'm a little more optimistic on the hog market. It's already crashed, by the way, and we had a major crash in hog prices already. Whereas cattle's been sort of working its way down. Cattle just had an absolute waterfall decline. So from where we are now, I think cattle's actually in a better spot and might actually see some better prices. Cattle, I just think we're going to keep working lower, and maybe we have that cascading crash market like hogs have already seen. Usually that's what you see to place the low, and we haven't seen that yet. We don't have to see that, but I kind of feel like we almost are going to see that before we can say we're reaching that normalization point that I think we're at now with the hog market.
Right. All right. So how's the poultry market reacting to that with these numbers that we're seeing right now?
Well, chicken once again is even more economical. It tends to be a little less resistant. We had all the issues with the flu that took place and all the killing of chickens and the supplies. Now that seems to be alleviating, and we're starting to produce. We can produce chickens really, really fast. So that supply is rapidly coming back online, which should push chicken prices and starting to push chicken prices down, making it even more economical. None of that helps the pork market and the beef market, which are typically comparatively at a higher price point. So And given that those markets, don't ramp up production like the chicken market can, I think what's good for the demand for chicken is going to be negative for the demand for pork and beef, just because everyone's going to look at how do I get my meat consumption at the least price point. And I think the chicken side of the equation is going to win out here as we get into the end of the year and as this flock starts to really grow again.
Yep. Right on. A lot of moving parts, Shawn. Man, there's a lot of moving parts right now. All kinds of things up in here. Trying to juggle 15 things at one time. That's things are going nuts, man. All the more reason to reach out to you, try to figure out what's going on, Shawn. So folks want to do that, what's the best way for them to reach out to you and ask questions about what's going on in the marketplace?
Our website is Hackett, Hackett, advisors.com. We discuss on our front page, we have a lot of things that we discuss are how we look at weather, how we look at our capital flows, how we look at some of our fundamental work, how we make our forecast to see if this kind of way of looking at things, which is very different than most, might be of value to your listeners.
Right on, man. Shawn, I appreciate you being on the podcast, bud.
Thank you, Casey. Always a pleasure.
Right on. I'm Casey Seymour with Moving Iron Podcast. Make sure you check me out on Facebook, Twitter, and Instagram at Moving Iron LLC. You can also hit me up on LinkedIn at Moving Iron Podcast and the ever so cleverly named Moving Iron Podcast YouTube channel, where you can find the video version of this podcast here. So all the information about Moving Iron LLC, everything we have coming up is on MovingIronLLC.com. History of all the podcasts, the blog posts, and all the information for the Moving Iron Summit coming up here in Nashville, Tennessee, September 11th through the 13th of 2023. So if you're interested in checking that out, send me an email at MovingIronPodcast at MovingIronPodcast.com, and I'll get more information to you. So with that, I'm Casey Seymour with Shawn Hackett. Let's go, this iron, folks. Out.
Moving iron in the 21st century.